What's up, guys? Today we are going to be talking about Hershey Stock, ticker HSY. I hope I'm not biased on this one because my favorite candy is Reese's. I probably eat I don't know, 4 to 5 packs a week. But anyway, let's get into it. Sweet returns, you may ask. Okay, so for this video, we're going to be covering a couple different topics. The first being Hershey's portfolio. That's just all their different brands, their net income and free cash flow per share growth, some of their dividend metrics and what I like about them, and maybe some stuff that I'm, hesitant on. Uh, there's some market share graphs we'll go over, but they're kind of outdated, which I was disappointed in from, Hershey's official website. And then we're looking at charts, and I'm kind of going to go through, how I'm viewing this one. So let's get into it. Starting with Hershey's portfolio. I mean, obviously, this one has a lot of brands. Some stuff you guys might not even realize is Hershey, Fifth Avenue. I don't even know what that is. Almond Joy, Bark Thins. I don't know if that's a big one for healthy people and stuff. Breath Savers, they've got gum, more healthy chocolate. Good and Plenty, I think that's maybe like an old person one. I don't know. If you guys like Good and Plenty, let me know. I don't even know what it is. Cadbury, Honest, which Honest is its whole own company. So I guess Hershey has the organic gummies part of Honest. Obviously Hershey and all their different, products. Heath, Icebreakers, Jolly Rancher. I think everyone likes Jolly Ranchers. Hershey's Kisses, Kit Kat, Milk Duds, Reese's, and the list goes on. Rolos. Not sure what this symphony is. Twizzlers. Obviously, Twizzlers are very popular. Definitely some mixed reviews. Whatchamacallit, Whoppers, York. I don't even know what that. I'm not even going to read that one. Zero. Okay, so, looking at all these brands, guys, a lot of these are household names, and they have been for a very long time. So with that in mind, it's no surprise that Hershey has a wide economic a wide economic moat rating. So essentially what that means is they're going to be able to generate bottom line and growing free cash flows for the foreseeable future. And that's on a 20 plus year timeline. So again, a wide economic moat is just something that it's definitely preferred for dividend investors. Moving right along, net income and free cash flow per share growth. These are just fundamental metrics that we obviously want to look at when we're deciding if a company fits in our portfolio. We'll look at Seeking Alpha right here, December 2018 through December 2022, and then TTM, that's trailing 12 months. You can see the general trend here. It's gone from, 1200 to 1900. That's an upward trend. We've identified that, and it's not much more than that we're looking for on net income. Obviously, the quicker net income grows, the better. But depending on how mature the company is, you're going to see that slow down over time. And then free cash flow per share, right down here, $6.05 in free cash flow a share, and then $7.93 in the trailing 12 months. It was actually better if you would have looked at it at the end of December last year. So again, the same sort of thing, this uptrend. And I've talked about this before, but the free cash flow per share, it's a metric I personally like to use because that's generally what we want to see outperforming the dividend, outpacing the dividend. And we'll get more into that with that payout ratio. But yeah, one other thing real fast. Obviously, it's favorable to the investor when a company is buying back shares much more regularly than they're issuing new shares. So, again, a quick double check here. We want to see this downward trend. You can see from 2010 through present day, Hershey has, overall bought back shares. I mean, there's been months where they've had to issue shares like here and there, but again, we're looking for this general trend and it's down. That's what we like. Moving right along. Now we are going to go over the dividend metrics. If you guys have watched this channel, you know that I'm a dividend guy. So let's look at some dividend stuff. So, quick summary. The forward yield on this one is 2.5%. And, you hear that starting yield for a dividend stock and, you're not blown away. We looked at Coke in a video, I don't know, I guess a week and a half ago. But 2.5%, that's not the highest that's not the highest starting yield for a dividend. But, there could be some other factors that come into play here. So let's dig into it a little more. Their growth streak is 13 years. Obviously to me, that's an acceptable track record. I usually like to look at companies with 12 plus years of a track record, but, I've made exceptions. Let's move on. We'll go to safety. Actually, we'll start with dividend growth. So yeah, with that starting yield of 2.5%, you might say, okay, that's not that's not the best. However, this could definitely be viewed as more of a yield on cost type of play, because we look at these numbers for the compound annual growth rate of that dividend. On the 3-year basis, it's been over 11, and then on both the 5 and 10 year, it's been around 9.5 to 10%. So, relatively to I guess a lot of other dividend paying companies, this is a pretty quick rate. Okay. And we can even see the 1-year increase, I guess, is 15%. So, I mean, this could definitely be viewed as more of a yield on cost play. Again, guys, with that in mind, though, you still need to pay attention to that starting yield you're getting. Okay. Because even if a company's growing their dividend, year over year, that's not guaranteed to continue in the future at that same, aggressive clip. But definitely just becomes a game of, weighing different things for your own personal investing tolerance. We'll look again at the safety. I touched on that free cash flow. You can actually come to the dividend safety tab and see right here, cash flow payout ratio for Hershey. It's sitting at not even 34%. So, guys, obviously Hershey has the free cash flow to support their dividend. And, that could suggest they'll continue to increase it in the future. But again, there's a lot of stuff to keep in mind. Moving on, and I wanted to look at the market share for Hershey in general. So, I was kind of, I guess, poking around their investor relations website, and I was pretty disappointed. I mean, this graph is only goes to 2021. Also, scrolling through some of this stuff, I mean, it kind of seems like they had the intern do this, I guess. But anyway, we'll still look at the numbers because, I mean, again, with a long-term play, I'm not losing sleep over, looking at 2021 numbers. Okay, so this is just showing here the addressable market in the US confectionery space. I guess confectionery, it's just a fancy word for sweets. So chocolate or candy, anything of that nature. So, yeah, I mean, the addressable market in 2021 was, almost 29 billion. So I'm not sure what it's at now, but obviously, if Hershey can capture, you know, any sort of meaningful chunk of that, I mean, the consumers are there, bottom line. And then, okay, so we look at Hershey, their market share as of 2021. They had 32% of the US confectionery market, trailed by Mars at 27. And then it's kind of a drop off to these more, fancy type of stuff. Ferrero Rocher. I don't know how you say that one, but it's Hershey and Mars competing, I guess, for that number one spot. So moving along. Oh, and then this is just chocolate, US chocolate. So we talked about sweets. Hershey has the lead, with Mars being a close second. But then we look at chocolate in general. They have much more of a substantial lead for that market share. Again, I don't want to spend too much time on 2021 numbers, but I figured I'd include something from their actual site. Gum, I guess they have 14% market share in the US of gum, which is kind of surprising to me. And then non chocolate, I guess this is confectionery, minus their chocolate segments. So I guess this is like the main confectionery up here, and then they've kind of got it itemized. But again, this is not, this is honestly one of the worst, investor presentations I've seen. And I had to search for it quite a bit, which was disappointing. Moving on. Um, okay, so yeah, we talked about, that starting yield of roughly 2.5%, and how I typically would like to see a higher starting dividend yield for positions I'm going to enter. But, again, with something like Hershey, with such a wide economic moat and, the free cash flow to support future dividend increases, I'm not necessarily, I'm not writing it off, I guess, because of that smaller starting yield. I am interested in this one, and I posted a video about Coke and how I'm kind of viewing that one. And I think with Coke and Hershey both being in, I guess, this consumer staples kind of sector, I'm kind of viewing Hershey in like a similar manner. So again, not to get on here and lecture about technical analysis, but we'll go over some charts. You've seen in the past, I guess since 2008. Obviously, 2008 is kind of going to be an outlier in the movements of a lot of stocks. But since 2008, you've seen any time Hershey has kind of dipped into this or below this 200-week moving average, which is the green line. Historically, it's been a great time to enter. So that's kind of what I'm seeing now. You kind of see it dipping under that 200 week, and now, quick market rally. It's worked its way back above. I had on my chart here 170, and that was going to be the price I was like, just hammering capital into it. But, with a company like Hershey, you're always going to be paying more of a premium than you might in other type of stocks. So I guess for me, I'm looking at starting a position. I haven't yet. Um, I guess I might, take a few nibbles here and there, but I would like to see this one fall lower. And like I said, that 170 mark is really, really when this thing's going to get more attractive for me, in my opinion. So again, we'll have to wait and see. if we don't get more of a dip than we see right now, I run the risk of just, building this into a smaller type of position and just not having the time to get, a meaningful position built out in it. But, that's not the worst thing in the world when you got a quality company like Hershey. So I've said it before, but with this one too, I'm going to take what the market gives me. I'm going to keep an eye on it. I'm going to keep an eye on that starting yield. And, if I get some capital, I might start something in it. But right now, I'm probably more interested in, I guess, slowly chipping away at that Coke position amongst a few others I've already got kind of built out. Okay, so a pretty relaxed video today, guys. Thank you for tuning in. I thought I had to film a little more laid back content today after my Jeppy video, which I posted on Monday. But yeah, I'm glad you guys could join me. If you're new to the channel, I'm a 22-year-old dividend investor. I've been doing this for 6 years now. Yeah, since I was 16. So again, I'm not claiming to be some expert. I'm just on here sharing my journey. And, if you enjoyed this type of content, feel free to subscribe, and I will see you on Monday.